folks, I'm excited to tell you about my new sponsor, Black Bull Markets. They are based here in New Zealand, and they're a New Zealand regulated broker who offers up to 500 to 1 leverage and over 26,000 tradable instruments. You can trade Forex, shares, commodities, indices, crypto, and they're an award-winning brokerage firm here in Asia Pacific with dedicated 24/7 client support and no minimum deposit. To trade with Black Bull Markets today, click the link in the description below or in the card above.
Good morning, afternoon, evening, everyone. Good May. How's it going? How's it going? How's it going? If you're in the stream, just hit a nice like. How do you put a like? Thumbs up. No. Just like it. My name's Gentsla, and I'm here to trade with, well, basically just to trade the Fidelcrest challenge. If you can hear my audio, please tell me so in the comments. And yeah, basically today I already took a trade because the stream started a bit late. Hello. Let me just bring up my chart quickly. All right, now today we've had a massive run over here, as you can see in London. It's been huge. Okay, it's gone all the way down. Let me just change this to this. There we go, it's better. So price went from, in London, it just tracked all the way downwards. Now it left this big leg in price. Now price, after an extension of a leg, you generally would require some kind of retracement, right? And hi there, Nyam. But my whole thing was my general trading thing. We have our electronic trading and real-time trading hours for the Americans, for the American time zone. And so after that move, I set up my buy side and liquidity at 8:30 and my sell side liquidity. And then price broke once. And if you've been watching the streams, you know what I look for. I look for a break. I then look for a second break. So that happened. That was my first break here. There's the red candle over there. And my second break was over here. After that, I would be looking for a fair value gap. But because it came and tested, you can see over here, because price came and tested this already, it left this over here. An HP FVG, I call it in my box. This is a high probability fair value gap, meaning that it's likely that price is going to come and test that, especially with a divergence in GBP USD and Euro USD. This is a smart money tool that is utilized. Very simple. So I just took my general 1 to 4. As it came down here, tapped in, had my stop loss underneath here, and I targeted past this liquidity over here because it goes, my general trade is a 4R. I am expecting price though to go to this buy side liquidity over here, at least. Then 50% of this big block over here. So if you draw your fib on that, that would be exactly 50%. I calculate it easily because when I put this is quite cheeky, but when I put the writing inside, okay, it puts it directly in the center. So I know that that's 50% exactly right there. So I'm expecting price to at least touch this gap over here, 50%. Ultimately, we're looking at it going over here, unless they want to put it into here and then completely down trade the rest of the day. But after a huge move like this, I'm not expecting price to do anything that is, how do I put it, that is trustworthy. apart from the initial reaction. You can go back in any type of price and you look at big moves over here. So for example, you have a big move here, same thing, London, and then you have New York or coming into New York, and it's just choppy, 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 choppy. And then we have big move, and then it's just chop, 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 chop. People can lose accounts doing that. People can literally just lose their accounts. Now, I was telling everyone that I was expecting the other day this range over here to come and break through that range right there, and it's done so beautifully. So if you're with me on Monday, Monday was over here, I think somewhere around here. Yes, over here. Now I was actually expecting Monday to come down into that range, but it didn't. All right, it actually bounced off of it, kept going higher, and then made, as you can see, a nice little 50% range, and then went a little bit higher. And then Tuesday, yesterday, I was looking at the short as well. So between 950 and 1010, which is actually this little section over here, price action. Okay, what I was looking at is I was looking at a move on US 500. Now the US 500 was actually beautiful. So let's just pull this back in time. Yes, over here. 950 and 1010, it carried going higher, and then it made a lovely breakdown lower. So I was tracking this all the way it was going down. What this big pink thing over here is basically, it is the breaker over here. So price made a little nice little squarey square action over here, and it went lower, it went higher, and then crashed down, and it left in there a breaker. And that breaker, it came up, it rode out this high, this liquidity over here, and then just completely started coming down. So from that point over there on Tuesday, I was like, this is the high of the week. It's not going to come back up here for the rest of the week, unless Friday is going to be an interesting day. But as you can see, that breaker came back in over Asia into London, and then just completely crashed down today. So now what we're looking at is it's just, I feel like it's just going to be a whole bunch of choppy range, and I don't think it's actually a good market to be trading in right now. Like I said, unless you initially got into this move that was there this morning, I mean, it was just beautiful. What it's doing right now is it's just setting up liquidity. So as you can see, there's a whole bunch of equal lows here that were formed, and that's going to get crashed through. When I look at GBP as well, if you look at these highs here, these are equal highs over here. So that's later on, that's a target for price. So GBP, I'm looking at 20920, even higher to the range over here to there. I'm looking for at least going up after it's made its moves, at least to come back up here, whether it's today or whether it's tomorrow or whether it's next week, it will go up into those ranges. But my trading strategy is time dictated. So yeah, that's done. If you were in gold, this is on the 5 minutes. So if you're in gold, when was it? It was on Monday as well. So Monday came up, and there's a whole bunch of short movement within. Go into the 1 hour. I actually charted this for everyone as well. There's this big fair value gap over here, which was tested, but it didn't actually. So if I draw another one in there, it didn't actually reach it fully, and price during the week has been wanting to come up into that. After that, made a small move, filled up the range perfectly, almost to the pip. What is that price range? 191440, and the high was 191461. So that was like a 21-cent difference. And of course, you're actually looking for these higher price points over here, which has just been tapped into. We've got a high one just above that, and we've got one just above that as well. Within this fair value gap, these points over here are your resistance. So on the 1 minute, as you can see, price came right into here. If you were taking some kind of a divergence, whatever trade that you would see, you would wait for a break, a second break, and then you'd enter a trade. So it was, here's break one, that would be break two. No. Here's break one. Here's break two. And then we're looking, see how beautiful price reacts to that level. You could have taken, so if you look up into here, there's a little fair value gap right in there. I'm just going to call it a void for now, so you can see the difference in price. Within that, you could have taken a short from there and could have been there, and you could have been seeking these lows over here. Go for a nice 3, possibly 4. That's why I trade 4s all the time. 4s are just beautiful. It gives you a lot of confidence. So we have our high over here, trade done, and that happened within 9:50 and 10:10 after the move. Going back to the previous day, we're looking at 9:50 and 10:10. Where are we? There, not there, not there, not there. Yeah, yes. So 9:50 is over here, and 10:10 is over here. That's the price right there. So from this price to this time zone over here, that's a little time zone. Okay, price does something very interesting. It goes up, it comes down, and then that's the low, and then it goes up again, comes back, and goes up here. Now the reason why I estimated that it was going to take a short didn't actually pan out fully, so it would have been a break even, but you could have gone for a 2. It's basically just because following market flow, we have this fair value gap. There's a whole break over here. That was a trade down. If you're looking at the fair value gap just inside of there, so let's remove that. Just inside of there, the high above here, that's how I see where my price is placed. It trades straight down into that, but that was a high impact news, and I wouldn't have taken this trade anyway. And again, if you're looking up here, this fair value gap, this fair value gap right in here, you could take a trade from there with the highs over here, and you take your whatever you're doing. So that is a short model. If you see price doing this though, it's done one over here. It's one break for the previous one, goes up, comes down, breaks again. You would be looking for a type of buy from this area. What happens when it hits that area? Lows over there. So that would be your level. And funny, that happens in Asia. If you see what happens, again, you can restructure it. This is 1. And then as soon as it comes up here, I'm looking for a break of that, which happens. Then you come into your fair value gap right there, and you can take a long from anywhere there. The stops underneath here during Asia, going up to the highs of that previous leg. Beautiful. So yeah, and then today it's just hit London, and it's just traveled high, and we are now in chop zone. So if you haven't taken the trade, just be very, very careful, because in my opinion, you have GBP has got a lot of downside to take. You see this low right over here. On euro, it completely shattered that price. Let me show you. That same price action in euro, in GBP, that's over here. So GBP is actually, I mean, euro is oversold compared to GBP right now. And I'm expecting GBP to catch up with it. So GBP needs to carry on crashing down. It needs to carry on going lower. Putting up euro again, because I had to trade euro and US 500. This would have been a beautiful trade as well. We have buy side, we have sell side. And let's go into the 1 minute quickly. Okay, we have our time zone, 9:50, right over here to 10:10. Just in that range, I actually was shorting it. So that's a beautiful circumstance, because as we came into buy side, I'm expecting now to take out sell side. This is sell side right here. So I'm looking for price right now to go lower down to here. And euro was the same thing, just the opposite, because it was completely oversold compared to everything else, and it's gone up, and I was in that move over there, and then it started coming down. So yeah, I expect to just consolidate. There's only a few things that it can do today. It either consolidates, or expands. So let's look at the daily quickly. On the daily, I didn't put that in my higher time frame. Let me put that right now. Time frame. Okay, so let's looking at a higher time frame right now. On your daily, we have ultimate buy side over here. We have short buy side with a big, large fair value gap over here. 4x pips. I actually took a nice little 4R. I was just showing it before. This one right here. You can see the nice little thing over there. Beautiful 4R. There was a little divergence in there with that little fair value gap. It needed to reprice above these equal highs to this little breaker right over here. And so it did that. It just tapped the high side of that and the low side of this candle right here, and it's come down. So yeah, this was okay. I was done. It was within my time frame, and I'm happy. And now price can do whatever it wants to do, and I'm chilled. But unfortunately, my stream could only start at 1:30 because Aerial FX was streaming. Otherwise, everyone would have been seeing what I was getting involved with. Now you can see this; it's diverging. But as I said before, Alberto, I wouldn't take this divergence to be bullish for euro right now, because if you're looking at the higher time frame, as I was just explaining, price has just come and just tapped that liquidity right there. Now, just beneath that, we have consequent encroachment of this nice large wick, and then we have the sell stops racing just underneath there. We have a nice volume imbalance that was not tested today. There's a huge range right now of this whole candle, basically, that would need to be filled in later on. It's huge, absolutely massive. But I wouldn't trust the divergence right now, and I expect it to go into some kind of consolidation pattern, just because we have euro. It's showing, yes, it's showing divergence, and you can see here on the 1 minute, it's still continuing down with divergence, yes. But if you're referencing from here to here, that is up and that's down, yes, it's divergence. But after this move has already played out, I'm not expecting it to go higher. I'm expecting just to chop around, because if you look at the price range on the 1 hour, if you look at this whole section right here, okay, if you just look at the price, you go up, down, up, down, up, down, everything's working perfectly. Euro, we go onto the 1 hour as well. Look at the price action is the same, okay, from over here to over here. So price is the same, but Euro has come all the way down and GBP has not come down yet. So the market needs to now catch up. So GBP now needs to catch up to Euro, in the sense that it needs to come down and do this, unless it's going to hold and they have stronger interest rates. So I'm expecting Euro to actually go down further and literally consolidate into this range here underneath that wick, which on GBP they've already taken those wicks over there, right there. That's taken. So I'm expecting to come down here, and then we might get something else coming in. Now that might be tomorrow, it might be Friday. It's going to be interesting. DXY is the same thing, just on the reverse. So I'll take this to 1 hour. As you can see, prices, if you're looking at in correlation, this whole leg right here, that whole leg right there is equal highs right over here by this buy side. So I've got high time frame on here as well. As that buy side was taken, prices come up, it's come tap this buy side beautifully and come down and then hit the sell side beautifully, and now it's bouncing back up. Now it's targeting some form of buy side, which is, if you look at price right here, I'm just going to remove this. There we go. You don't need this. So I'm expecting this little volume imbalance to at least be tapped into and then start coming around again if it's going for the sell side, because these lows over here are not, I'll put it. So here it goes, it's a little bit, and then it goes up and it comes down a little bit. So this is an interesting reaction in price, which is formed like kind of like a little W. Okay, the lower time frame, that could be seen as a double bottom, but you don't see this happen in price a lot when it doesn't get. So if again, so we've got a low, a high, and a low over here with the wicks. We're looking at the low side. This is high, low, 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 high, high, and then it goes up with the higher, lower, higher. This has gone lower, higher, lower. And so we look back, we've got lower, higher, 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 lower, higher. If we look in fractals, we're looking at this price action right here. Lower, higher, lower. What do we see in that price action over here? If you're looking at that in reference to that right there, we're looking at price going up. Okay, so price is going to go up to mitigate whatever's up here, which is whatever's up here, which is this whole section over here, possibly this volume imbalance, and then it goes lower. So that leg right there is this whole leg right here, and it doesn't reach it fully. Oh, there's another volume imbalance I actually need to add in here that I haven't done in the higher time frame. Okay. Beautiful. So we could actually be looking at that volume imbalance, but there it's very high confidence. I'm just going to remove this one now, right here. Okay. And yeah. Hello there, Natology. Welcome. Good to see you around. I was basically saying that I've already taken my trade for the day. So as it was triggered at it was, what time was it? 10:05. That's when my trade was triggered. Sorry, I've got my journal, making sure you have to write down your trades. Track what excuse me, track what you're doing. Yeah, so we have this whole volume balance that needs to get priced into, and after it does this, as I mentioned, it was actually the Flip King yesterday was trading, and I said that I expect dollar to go long just because the reading from yesterday, the CPI, people didn't understand why the market was doing what it was doing, and they're just expecting it to carry on going lower. Going higher. In my expectation, I expected dollar to go higher, not lower, even though because it's come down and it's already taken that sell side and it's consolidated here a little bit. I expected to go higher. That read yesterday was a beautiful, beautiful read. You can actually get the reads if you go into replay mode. Let's just put this on the 5 minutes. Go into replay and put it yesterday. Okay, so should show me the news, but it's not showing me the news. Oh, that's okay. That's what it is. Yesterday was CPI. But yeah, Natology, I told you, my man. I told you. So basically today, because there's been such a big a monster move. Right? So this monster move for today has just come straight down. My initial thought is that I'm looking for 1.07320. All right. It might come lower. It might come take out the sell side, yes. Or it might just consolidate here for a bit and then go up there higher, either tomorrow, Friday, or possibly even next week. We'll be looking at gaps for that. But I'm looking for that as a tap because it hasn't filled this range out. And then we have, where was it? This week, yes, like I said, I expected price to go down, and it did. Beautiful. I was expecting DXY. I put on the Flip Kings thing yesterday that I was looking for one spot for 104.4001 as my first target, 4001, which is just over here. And that happened today. It came in there beautifully. And then after that, just because of this whole range right here, there's another gap over here that is not referenced in price, and it's actually above 105. I can't remember the number I put. Let me just check my chart quickly. 5 minutes. 105 spot 105 spot 267. That's the level I'm looking at for dollar to go to. So 267. If I put this over here, 267. Okay, why am I putting it there? Because of this gap right over here. There's a little gap in there. All right, so let's just put that as a void. There's a gap over here that happened in price. It's actually a daily opening. So that gap is quite important, and that is what it's seeking. So it came and did this. It left a massive monster mammoth gap over here, which it's just come into today, and it's going into that. Easy days. Yeah? Reading price. See what's happening. Yeah, we just came and attacked this sell side, but we haven't filled in the daily. the weekly opening gap over there, and we're also still seeking these lower prices down here if the legs are reflective of one another. See, so as I said, it's going to be consolidating. It's up, down, up, down, up, down. And I'm first seeking this buy side if it's going higher, or sell side down here if it goes lower. After that, 50%, which is right here. Okay, and then after that, ultimately over here. Now that might not happen today in this session. It might happen in Asia, or it might happen in London, or it might just continue going down, and then we'll be in black swan trade territory. All right, now someone called for US oil. I don't do oil that much. Check. Oil. Which one are you using? Are you using the TVC for oil? Let me just put that on, and then oh yeah, I didn't put on some music. Lo-fi, driving, this one. I got that on. US oil's on. Yes. Back. Why not? This has got to be COVID, yeah? Okay, now oil, in my opinion, just arrow. It's not necessarily divergence, although divergence does help me it's like another form of confluence in a way. There'll be times where I take trades and there is no divergence in the chart. What I'm looking at then is I'm looking at like dollar. Right now, what's happened in dollar? There was the buy side over here, and sell side over here. It's just taken buy side. I am seeking higher prices, so I won't be looking at shorts from there. I'll be looking at longs for it to continue pushing in the session, but then eventually for it to come back down to this opening gap right here. That's what I'm looking at. But yes, I'm looking at oil right now, and I'm looking at there is a monster drop today. The last 3 days have just been down. Now this is a very interesting thing because I've been keeping track of what oil's been doing. Now, why I say it's interesting is because of all the just error. I don't have an interview, but if you look at my stream from last week Wednesday, I basically illustrate exactly what my strategy is, and you can use it on gold. You can use it on euro. You can use it on GBP. You can use it on a lot of things, basically. Now, with that strategy, you just have to understand where your bias is for the day. And your bias can be, even though the market's in a sell mode, like for today, for example, the market's in complete sell, all right, and everyone's just thinking short for days. I wait for my time frame. I wait for a break in structure. And yes, the divergence was great, but I wouldn't have got this divergence because if you look at here, okay, let me just drag this up. If I'm here in price, okay, and I see the divergence over here, I would need to wait. Right, I need to wait for it then to show me after the divergence that it wants to go higher. Now, I don't trade divergence that way. I trade divergence with ICT. Okay, it's called SMT divergence, which is smart money tools. So what I'm looking at is I'm looking at the fair value gap that's over here. This fair value gap was seen to, but it left a little part of that fair value gap which wasn't balanced in price. And so in my opinion, that was what I call a high probability fair value gap. And it confirmed the divergence. As soon as I got into that, it shot up. And for me, those are my best trades. If price touches and I press buy, okay, my range is a little bit higher because as it came down to this low, I entered and it gets me in a couple of, with the spread, it gets me in a little bit higher. And then it got me in, and the next candle, it just shot up. As soon as I see that happening in price, I know that my trade is basically good. And I'm just basically waiting for it to hit targets. If it hovers around the area that I've traded in, so for example, if I decided that I wanted to take this and drag that up because it hasn't seen that price perfectly yet, then right there was a shoot up, yes. But if we're looking at now, if we're looking at GBP, at that point in time, price still needed to start making lower lows. So I'm not looking at that as the market shift. I'm looking at this as just a choppy consolidation session where it's just going to bounce around. Now it's 11 o'clock. We'll see, because normally the move is made between 9:30ish and about 10 something, there's a move that's made, and then after that there's another move that's made, and then after that there's another move that's made. Because it did this, it shot up. That was your consolidation into accumulation into expansion and then distribution. Now it's gone into a reversal. No, I think that yes, these are all targets right here. Every single one of these over there. So if you use trend lines, all right, every single one of these points is a target. These are all like targets that the algorithm can use to cascade price higher. Right there. Those are all point like buy side liquidity. That if it goes higher, it's going to shoot past here, and it's going to use that as your springboard to go to where I've said it wants to go. But because now it's not within my time frame, I wouldn't trade it. Now getting back onto oil and looking on this, on the large like macro scale, you have COVID over here. Now COVID for me is a very important point in time when it comes to my analysis of price, because it was a huge crash in the market. All markets crashed, but they didn't all crash equally. There is a large section of price, as it crashed, all of these highs needed to be mitigated, or not mitigated, then price needs to be rebalanced into this area. But as soon as it did that, down here, if you look at most of the most charts, there's huge legs that go up, leaving lots of little imbalances in price. So the move that's happening right now, that's why I'm dollar long on the macro. Right, there's huge price points over here where price needs to come down to mitigate or to see so I'm looking at S&P is the same thing. So US 500, this huge leg down here, I'm looking at that as an interesting, especially down here at 200. But this area over here is nice, 500 to 600. Same thing. All that whole leg over here needs to be rebalanced to in some point. Right now it's interesting because we have just hit the 50%, and then that's why everyone was like, oh, now we're going bullish, it came up higher, and then it's like, no. Why? Because we're still looking for larger downside moves before we can possibly see the next bull run. So if you're looking at crypto, if you're looking at anything, that's basically macro scale in my eyes. So we're looking for much lower prices in the scale of like 1,000 handles or more, 1,500 handles for it to go down. That's what I'm expecting. Huge moves. Sorry, that's my perfectionism. I'm going to delete that. Let my perfectionism go away, because everyone can do that themselves. The reason why I have that in price is because if you look at all of these previous times that price came down to, okay, we have this section over here, which is January 16. I don't have prior data, but price made its way up. There's left a little section of price here at 1,800 as well. Gold, I think that gold will hold more than other pieces than other things, just because when everyone is scared of fiat currency or forex in a way, they tend and they want a place of stability or security for their money. Stock markets are not security. All right, stock markets are investments. Security is basically safe. So when you hear this, a lot of traders will say something like it is risk off or risk on markets, and when it's risk off, what tends to happen? Lots of money goes into the dollar, and lots of money goes into gold. So that's why right now you'll have gold and gold almost tracking equally in a way, because everyone's putting their money into those assets compared to the stock markets and stuff like that right now. So gold is seen as a safety or security net. So we're getting into oil. Now, going into oil, if you look at this whole leg over here, okay, from the bottom to the heights over here, we haven't even come down from the highs to test the 50. Yes, it's over here, but that's through the move. I'm looking at price after. I'm looking at price from that high over here as my 100% range. Okay, just because of that low and that high. So just disregard those. We haven't even tapped the 50% there, yet we have tapped it in US 500. So I'm expecting oil to go lower. I've been monitoring oil because even though if I look at oil will eventually go back up just because people do need it, and then there'll be a scarcity of supply. There's a lovely bit of price action right here. Hasn't been seen to. You also have a void imbalance. We have an imbalance over here. We have that was seen to beautifully actually. This was seen to actually went a little bit higher, which is fine. You have a little imbalance just in here. And we have a little imbalance just in here. That was seen to a whole bunch of equal highs, and that was just a consolidation range for it to go lower. Now, the reason why, Sean Miller, new member, nice one. Hello, Marco da Costa, nice to see you. So the reason why I'm expecting prices to go low again is because, as I said, with oil, there's been a very interesting narrative that's being built. Now, the narrative on oil is that basically all the countries that produce oil are not creating more supply, so that they're not mining more oil. Why are they doing that? Because all the international markets, all the first world countries are basically telling everyone, we're moving over to renewable energy. We're moving over to all those things. So they have not produced more. Now, right now, they have an excess of supply that they already have in their reserves, and they're just unleashing that onto the market. And oil is going down in price. But as soon as that comes in, there will be a demand for oil in the future, unless of course oil goes to zero, which I don't think is going to ever happen because everything runs on oil. If you think about your car, Like even the machines that they use to make solar panels and the machines that they use to make all of the renewable energy technology, they all have oil components in them. They all have machines that use oil to manufacture them. All the plastic in the world is oil. So many products, tires are oil of your cars. So there will always be a demand of some kind for oil. And yeah, the amounts that we're paying right now for petrol and for diesel and stuff like that is absolutely disgusting. It bothers me. It bothers me a lot. But yeah, basically my oil thing, price prediction is for it to go lower. Just looking at this price right over here, you've got beautiful equal lows, relative equal lows over here. So I would expect oil to either come back up, tap this, or to go straight down into that and through that, because you have beautiful equal lows just underneath that as well. You have equal lows just underneath that. Every single consolidation leg, basically. And here, this for me would be ultimate end. But that's talking like years. All right. This is like years when it comes to sell side. So how many pairs do I trade? I trade 2 pairs. I trade Euro USD and I trade US 500. Those are my 2 pairs. And then I dabble in gold just because the spread is less. Sometimes it's only like 10 or 20 cents spread compared to US 500, which the spread you can see right now, the spread is around 50 cents. Later on in the afternoon session, the spread gets down to sometimes like 30 cents or 20 cents, but yeah. So thanks for asking that question. So for US 500, I would be seeking higher prices for this, just because we have all of our this is my 11 p.m. candles. We have everything coming downwards. Now I'd want to see at least this being taken over here. At least that works perfectly within that fair value gap on the daily. But we also have the opening gap, which is right over here for today. So let's just put that in. The opening gap for today is actually really, really minimal. It's really small. Right here. I'd want to see price come up to there. If it doesn't tap the sell side, as I explained before, if it doesn't tap the sell side, it's going to go up. We're looking at from the height of the leg, which is over here, down to the lowest low, 50% is over here. And if I'm looking at the low of that gap, that's where I take my safety trades. All right, I trade at 250. So 50, and then possibly later on, either today or tomorrow or Friday, we're going to go up and fill this range in over here, and then possibly have a tremendous crash or a bust through. Why it might be a bust through is just because we have very high, how do I put this? Right over here is like equal highs. Now down here we have a fractal that has broken this one over here. So that's a buy side fractal. So I'm actually looking, yes, it's been manipulated down, but I'm looking at price to go higher in the short time frame. Yes, Marco da Costa, nice one. So when I say a shorter time frame, I'm talking like sessions. Right? This is like the difference between me and other people is that I'm not looking at 15-minute I'm not looking at like the 15-minute chart and and projecting off 4 hours and weeklies. I'm projecting off of like how price is on the day. All right. That's literally what I do. And you can see the same thing is drawn out on DXY. I have this. I'm expecting after buy side here has been taken, it might go high. Oh, not that one. This one. I want it to go and see this, but it doesn't need to. But it's highly likely it's going to, and then it's going to come down to the 50, and possibly even come down to the new day opening gap. And that's basically it. And you can wait, and you can see where price wants to go. Right now, it's just doing in euro. It's just consolidating, as I said, with GBP going up, down, up, down. This is traditionally, if you see something like this, these two candles over here, this traditionally is seen as a market reversal type of candle. All right, so you can see it over here. So price has gone, so that would be your buy side. All right, and then we have sell side over here. Now, as you see down, up, price goes down, it's indicating that we are going to see lower prices. Now we've come over here, we've gone down, up, down. As it's tapped into here, I would want to see it reverse, but I said typically, if this wasn't formed on CPI, which is complete manipulation, because they wanted to just basically the larger time frames. You have these traders over here that are like, oh, they're breakout traders, right? So these ones. Now their entry, the breakout traders, their entry would be just after it breaks out, putting their stops over here. As soon as price goes down and then breaks again down, okay, they have their stops. Now their stops are first initially, they might be put above this little candle, blue candle over here. So their first one will be here, and then it'll trail down to here. And then as they see that, they'll keep their trailing stop loss over here. And then as soon as it goes down to more, they will put their stop loss over here. And then that gets respected, it's fine. And they think it's going to continue on going. But then, bang, it just takes everyone else. And including the people that have taken that same trade and put their stop loss here or here or here, or possibly even to the highs over here, okay, because they see that as like the point. If they take that breakout trade, and then as soon as it breaks this leg, what people generally typically do is they take their stop loss and they remove it right down to break even. Now that section of price right there gets perfectly tapped into, especially if they're long-term traders. They then just will break even, didn't make money. You know, so it's very interesting to see how price gets manipulated. We're sitting here on GBP, and I am expecting it to go lower. Euro, I'm expecting it to go lower, but my whole bias is going higher. This is my bias. But again, we're in a day right now with news where there's a lot of different news events coming out at different times. So you must, when you're checking the news, let's go on to, what screen can I share? Okay, let's go on to what series of ICT best suits today's market condition? The one where he tells you don't trade. That's the best type of ICT market condition. Why not trade? It's a very, very simple thing. Australian edition. No, I don't care. No thanks. I just want to look at the markets, stocks. No, it's very different on the analysis, no. Economic calendar. You just literally bring up your economic calendar and you filter out all the rubbish. Okay. We go on to share that screen quickly.
I feel nauseous, believe me. Never had a lot of shit come easy. Had to work hard, struggle just to be me. Had to rise up just so they could see me.
Alright, so please don't mind all the rubbish ads and stuff on here. I'm not affiliated with any of that stuff, and neither is Trading Nut. But looking at this, you can filter out all of this, all the rubbish. You can literally just put on the ones that you want. I don't want to see China. I don't want to see Australia, Brazil, Chile. I want to see Euro. I don't want to see France or Germany, India, Hong Kong, Italy, Japan. None of that. All I want is USA, USA, and Euro, because I trade Euro. And there is a category here as well, so importance. I like looking at 2 and 3. Alright, I don't like looking at the 1. I like looking at 2 and 3. Then, once you've applied that, apply, you then get a whole new take on price. It filters out all the other nonsense, and you only look at the most important news events. Alright, now these news events over here, as you can see, let's look at yesterday and then today. So as you can see, there was a big burst of news at 8:30 that just came in, and then we have news at 10, which is also past now. We have news at 10:30 and then news at 4. So there's a whole bunch of news happening today. So every time there's some kind of news, there will be movement, because they'll manipulate the price in that. Now what you're just looking for is, well, how do you get in after the news event? Well, if you've read it correctly, so yesterday, not yesterday, but the CPI for yesterday, because CPI is 0.5 core CPI. Now core CPI is the is important, and it's more important than all of this other nonsense. Okay, you're looking at the core CPI, and then as you see that it's higher than this level, it means that the how to explain it? Because core CPI is higher than expected, it means that it's highly likely that the Federal Reserve is going to continue on with their rates and possibly even increase the rates. All right. They already said as well that they mismanaged or failed in their readings of their expectations on the terminus of the bonds. And that is a big problem, because what that means is that they didn't say a specific interest rate, but their general analysis is 5.25. And if that's wrong, then we're looking at prices to go higher than that. Now, removing this and then bringing up all right, removing that and bringing up the is this on the 10-year? Let's see. Okay, this is the 10-year. Okay. Now, price is expected to go to 5.25. That's over here. Okay. But they've projected that their terminus point is wrong. When when bonds go up, okay, when bonds go up, dollar goes up. Yeah, I can put this in the daily as well. Okay, dollar goes up. You go to the 2-year, exactly the same thing. Oh, that's massive for today. Why are they repricing it lower like this? So we could actually be seeing, so if this has gone down, dollar should be tracking the downwards movement as well, but it's not initially. So that's a very interesting thing to see in price. I was at almost zero. Interest rates are going up. I still expect interest rates to go higher. So yes, they basically misprinted or mismanaged their expectations, and I'm looking at a higher price. Why did I draw this level in price? Is because let's go into the 1 week. The last time we saw price interest rates at anywhere near this level, there's 2 times. And when is that? In the bubbles. Alright. Bubbles, bubble markets. Why do I say bubble markets? What was 2001? 2000, 2001. There was a bubble in the market. Okay. What bubble was that? The .com bubble. Alright. And then that basically was seeing the high interest rates and went down. When was your next bubble? 2008 crash that happened. That was your next bubble that got exploded. And right now, price is going higher. Now, I still expect it to carry on going higher. While everything else, if this goes higher, dollar goes higher, and everything else would therefore crash. Basically. So I am ultimate dollar long. But again, I don't manage price. It's just my observations and speculation. And right now, euro is actually coming down, just as I said it would. Go on to the 1 hour, 5 minutes, 1 minute. And what are we following? Right over here, GBP. GBP is about to break. If this breaks and continues going lower, we'll be looking for a massive a massive move. But we have two weekly opening gaps, that this enveloped nest. Okay, so it's going to come down here and it just needs to fill this price in, and then after that we'll see where they want to take price. Here we go. Price is going to be taken down. Sell side is over here, and we have this big orange candle right there. It's a daily level. That is consequence encroachment, so 50% of this wick. Yeah, right there, 50% of that wick. And we have ultimate sell side down here. That whole leg is being seen to right now. And ultimately, I would want it to go down. So if it breaks down here, I'll then add high time frame analysis to all of these points over here, and I'll be looking for fair value gap and fair value gap. And from there, it'll be an interesting time, because we could do a thing where we just do this on like the macro level, where it literally just does this, and then eventually sets up an area, because you can see it did it here. It just went up and came down, and went up and came down, and then it broke, and then it's come down. So yeah, GBP right now. So this is without even looking at I don't actually ever look at Japanese yen, but I can tell you that GBP is probably going to crash versus JPY. Why? Because the JPY and the US markets are actually very closely correlated. Let's go look at this. JPY. See. Yeah, it's just done this, and this is the weekly. Daily, yeah, it's coming down. So JPY it means GBP is strong. And that's actually referenced. You can see that here on, so let me just remove this, all this other rubbish that I have put in place, all these arrows, my trade and stuff, just gonna remove them because you don't need them anymore. And go on to 5 minutes, pull this out. Alright, so if we see over here, alright, again, that, what's going on? That this price level over here on the euro has been seen, but in GBP, that price level in GBP has not been seen to. So that is indicating that there's strength in GBP. So in this consolidation market that we see right now, you should be, if you are trading crosses like GBP JPY or GBP AUD or whatever it is, you're looking at strength in GBP. So let's go look at crosses quickly. So let's go Euro AUD. Euro AUD. Okay, Euro is weaker than Australian dollar. That's why this is crashing, as has been seen. Now we look at GBP AUD. GBP has gained in strength compared to the Australian dollar. So if you're looking at crosses, like it's really beautiful to see actually, especially right now when we've just come straight down. Dollar has gone straight up, and we're looking at a consolidation range. You'll see lots of really nice moves in the cross, what they call the crosses. Okay, the exotics. My channel, I don't actually have a channel right now. I'm actually just doing the Fidelcrest challenge for the stream. And then after I'm done with that, I don't know if I'll still carry on streaming here, or I might start my own channel. I don't know. But we'll see. I have a Twitter at the only Gentsla. So let me put that on. That's my Twitter, if you want to just search me up on that. But yeah, otherwise, right now we're waiting. So the move has continued down lower right now, as we can all see. Now I want to draw your attention to not the higher time frame, because that's another added confluence, right? But the new daily opening gaps. Now, where did we see price come and tap into all these the daily opening gaps, this whole nest? It took all that liquidity and came down in search of weekly gaps down here, which is actually further back in price on the daily. Right? These levels can be referenced and are quite important, and price reacts beautifully to them. So if we go over here and we look at this, we see here's the daily opening. You can literally just draw your box from on the 1 minute candle, the closing of 5 o'clock to the opening of 6 o'clock. Okay, and you just draw that out. And if you trade London, you can see how it just tapped in, it tapped in, it tapped in, it tapped in, and then hello. Alright, and then we go up here, we have the weekly. This is the next week. Alright, this is from Monday gap. It taps in Asia, taps in Asia, taps in Asia, it comes in, it taps in London, and then during New York, it just says hello and goes away. And every daily thing come down, taps in, comes down, taps in, goes up above it. It's beautiful. Now we're going to consolidate that with the round number theory. Alright. The round number theory is very, very simple. It's just on this, it is 1.08,000, and then every also 1.078 and 1.072 and 1.07,000. All right, gold is slightly different. US 500 is also slightly different. So if we look at the levels over here, we have 4,100, 4,120, 180, 4,200. You see price always does this beautiful respect to the round numbers, and within those two ranges travels down to the next range. Now what we're looking for, possibly for it to travel down to the next round number, which is 38,000 or 3800, and then we'll see what happens after that. Just like over here, after it came down, tap that, we'll see what happens. It goes up, taps into there, comes back down into there, taps, goes into there, comes, taps into there, taps, goes up, and then does a little bounce to do the same thing. Very, very simple. Yeah. So we're going to go on to Euro USD and just going to remove the weekly gaps, and you're going to see the same thing reflect in price right here. Okay, very, very simple. We go up to 1,100, 1,120, yeah, sorry, 1.10200, and then starts coming down to 920. What's that number? 9,000, goes up to just above the 9.2, comes down. You see retracement of 8.2, comes down into that beautiful level right there, where it didn't tap again, it didn't actually give them fair value. So what did it do? It sought the fair value later on in a little wick to take out those beautiful equal highs, and then just went downwards. All right, and every one of those levels is bounced on at some point. Now you can create your own trading model of whatever kind you want to literally, the equal highs over here didn't come to the right number. So when you're looking for a trade to go higher, okay, this is the ICT theory. If you're looking for trades to go higher, you need to start looking down for fair value. Now, if you're looking at this from the bottom to the top, fair value is anything underneath 50%. So you'd be expecting price to anything under 50%. You can search for it to come higher to seek out equal highs. So you can, after this point right over there, you can see that there was a market structure shift, and it also didn't quite tap into the 5.2 over here. It does a nice market structure shift, and then it started going higher, and it continued to hold that until it reached those equal highs over there, and obviously trade higher and higher and higher. So again, if you're up here, you're at this point from these equal highs, and you're looking for a sell, you wait for a week like this week. So I do use one indicator. So let's go back into the 1 minute. I use one indicator because sometimes I get so zoned in where I'm looking at price on my chart, and I'm looking at it like this. And I'm looking at what's happening inside of each candle. I'm literally checking to see what's happening. And so I can sometimes get so zoned in that I forget. So I sometimes add this thing called the least squared moving average. All right. And what it does is it basically, it is set to 25. All right. But it's very, very close to, I would say, I don't know, the 9 EMA. I don't use EMAs, but it's just to keep me on track. So if I'm over here and I'm like, okay, I'm looking for a sell. So generally price, if I'm looking for a sell, needs to be above this line. So then I'm like, okay, now I'll go up here. It goes above that line. And then there's a funny thing that I saw in price, that when you have the bodies doing this and this coming down like this, okay, where it comes underneath there, then that to me can be seen as a smart money manipulation, funnily enough, because you have all of these relative equal highs over here that get sniped, and then it comes down. We have break 1, we have break 2, market structure shift right there going downwards, and you look at your fair value gap, and you can take a short from that over there, or just stop over here and then just ride. and continue riding for days. Yeah. That's the thing that I found closest to like ICT in a way. Again, this is looking at the 1 minute chart. You can see the same thing that happens over here. Alright. Price, if I'm looking for a sell, I'm not going to be selling underneath this point over here. I'll be selling above this section. But when you see this, again, this section over here, you see how it pushed higher, but then this was like, oh, I'm not going to go higher. As soon as it broke down into that, you're looking at fair value gap anywhere within there, and you can take a short literally from here. You put it at the highs if you want, and yeah, this is basically how I use that indicator. It's literally I use it with ICT. I use it against ICT. So here you can see the same thing. It's pushed up, failed to reach higher, and this has come lower, and then now it's crashed lower. Anything that happened here? No confluence, nothing. There's a whole bunch of liquidity resting above here now. Again, I'm not looking at the indicator, I'm actually looking at price itself. So Gork, I've got multiple different ways, different entry setups and criteria that I use. I have a fair value entry, FVG entry. I have a volume imbalance entry. I have this LSMA entry as well, and this is something that's not ICT. It's something that I use just to help me, because sometimes I get so zoned in that I just forget. I forget to to check what's happening in price. But with this LSMA, let's just go back in price, go back in price. And again, you would be looking, if you're looking at an indicator thing, okay? What do we see over here? All right, you have this high right over here, and as you can see, price went a little bit higher, and you have from here going down to over there, okay, to that indicator there. Because this has snapped and taken out those highs over there, right? I would, with the displacement, you would look at a fair value gap. So again, this is a fair value entry, a fair value gap entry. All right, so I'll just put this onto the 1 minute. That is a fair value gap entry that you can use to literally just short, either from the middle or from the low, to just get in if you're scared of missing the move. I'd normally put my stop with the high. So it's not the swing high. Okay, lots of people get confused. This swing high over here, institutions don't want to come back to that high unless they want to go through it. Okay, so if you're right and the trade is in your favor, you should be safe putting either here or at just above the 21% of this leg over here, just above this level. So on your fibs, you'll see this as 79%, but just above the 21%, all right, you could set that as your stop. And you can see that happens with all of the big moves. So let's go in price again, and we check. Doesn't go higher, no. Right over here. So we have this high. See, that high breaks it, so that's going higher. And then this is going lower. What do we do? Beautiful. Fair value gap. And you can enter and put it at there. Very, very tight. It's a couple of pips. So I wouldn't do that in that case, because this looks like it's a chop session. I'll probably put it in the middle of this candle here. Consequent encroachment to that candle. Or you can just put it up here if you want to be really, really safe. Yeah, that's a good This is something that I developed. Gawk, depending on the time frame, yes, you can, but it is highly risky. Okay. For example, if I'm looking at this leg over here, all right, this is again, it's the 1 minute, and you have the high. So say you put it over here above this candle right here, you just got snapped, and they continue going lower. All right, so we go back in price and we check where it happens again. We have our nice, let's put up the institutional level. Where are we with institutional level? We're coming onto the 35-200. See what happens in price. This is something that I developed alongside of ICT stuff when I wasn't looking at. I was looking at it within kill zones, but not necessarily. It's something that you can use in Asia. It's something you can use in all different trading environments, even when it's like choppy. But I don't necessarily use this because sometimes it can sometimes be a little bit not predictable in a way. As in you need to. So for here, for example, we have that coming down, and we have the highs going up here. Now, yes, we have a little bit of a leg going down and we have displacement, but over here, you took that and you put your stops above here, you would have been taken out. So then what you're looking at is you're looking at doing that, yes, but then you're looking at taking shorter trades. So literally to the next inefficiency. As you can see here, it's an inefficiency right there. Go back and we look at price. Don't even know where it's going, but right here. Okay, so we see how all of this price action over here, this is coming down, and you have that going up right over there. Now you're looking at fair value of some kind of this previous of this leg over here. So we're looking at fair value right over there, which is 21. That's why I always put it below the 21, because 21's a high level that it can go to, or 38. Sorry, 21 is 79 or 62% retracement. And yeah, that would have been a clean trade. And then let's go look at price again. And then now that I've added in the weekly gaps and the new day openings, it just adds confluence to my direction. So what's happened here? Okay, right there. We have this low to there, and we have the actual candle price coming down to here. There was an expansion. You have your fair value gap, or you have your 38 over here, your 62%, sorry, or your 79%, and then you take a trade from there with your lows underneath that blue candle there, and we go higher. That was a beautiful, that would have been stunning. What time was that? Oh, that was London, of course. I don't trade London. That's a really nice little strategy. LSMA stands for least squared moving average, and what's nice about it is that it's actually a predictive algorithm. So let's go look. Price right now, as you can see, when you're going down, you see a whole bunch of down candles, and when you're going up, you start seeing up candles. It's actually it's pretty nice, but reading it correctly can be hard. And yeah, the ICT OTE is how you You can make a lot of money with just the OTE, optimal trade entry. Beautiful. Absolutely beautiful. But OTE in confluence with price action is just a whole nother level. Oh, there was another one. That was in Asia. Oh, I actually live in Asia. Alright, so here we have highs, we have going lows. You can either do OTE, or you can do fair value gap. Why is it high confluence? There's a fair value gap right behind it as well, and it breaks once, it breaks twice coming up. This one over here, that would be the risk you take. I would have taken that from there and put my stop above this plus spread. Asia trade, beautiful. So yeah, that's just something that I use, because you can see that if you take this away and you're like if you're traditionally if you trained yourself to look for it, here are a whole bunch of relatively equal highs. Now price banishes those equal highs really fast and then comes down really fast, and you can see it reflected in the LSMA. That's why I've used this indicator specifically, because it comes up really fast, comes down really fast, and then you see what happens in there, and it starts doing this, and then starts setting up equal lows. It goes down, there's no big one coming up, so you don't trust that. It goes up higher, it goes down fast through that, then that's right there is fair value. Fair value has been seen to in this whole leg, previous leg. If you're looking at that fair value gap over here, like that was beautiful, absolutely beautiful, and then goes down, leaving another fair value gap, entry, down. It goes higher and goes down, leaving fair value gaps. You can see in price, there's no fair value gap in there at all whatsoever. You have this fair value gap over here, and you also have this as your order block, bearish order block. I said, why did I put bullish when it's bearish? There we go. That's a bearish order block on the 1 minute. It's not the one candle, it's like the whole leg. 2, 1, 2, and then it starts getting broken. That's your order block. Negative, you have this. That is another trade idea. Could have been taken. But today, for those of you who gawk, the indicator is by it's just the general one. So if you've got indicators and you type LSMA, it's this one here on technicals. Yeah. And so again, if I'm just confused in price and I'm like, I don't know what I'm looking at, I don't know what I'm seeing, I will whip this up quickly and have a look at what's going on. So today, my trade was, as I've just described to you, my trade was from this little fair value gap over here. I entered over here, that just underneath there, and I took my 4R, goes to here, which is above these equal highs. Okay, now what's interesting is if you put up the LSMA, what do you see? We have this price, okay, or you can even put the wicks there, see, so yeah. The wicks are going lower, this is going higher. Now it's reflected in the fair value gap, yes, but you don't actually see it here. This is interesting. What's DXY doing? So price is just interesting right now. What time is it? It's about to be lunch, that's why. Lunchtime.
Trust me, there's nothing wrong. I just need to carry on, cause society's a myth put there to make you sit. Listen to what they give.
And it can also hold you to, as in prevent you from getting in trades. It's actually, this is actually the reason why I didn't want to hold above this level much, is because here on the DXY, as you can see here, price is going higher, and this spike over here is also still going higher. So that to me, with this indicator and smart money techniques, indicates to me that price will be pointing in that direction and continue going up. But I now don't actually need that to see that in the market. Because of these equal highs, my trade happened in this area right over here, tapped in, and then I took my short to this level, and then I was out and I was like, I'm done. And then price came up and it's done this, and it's come up and it's reflected in euro. It's done the same thing. I took my long up to here, it came in, it's gone just below that, just above there. What is this? 1050? 1050. So it's higher, higher. Not lower, lower. That's divergence. Divergence just into lunch. Why? Is it because it's a fast day today? So I call this a fast day because London's done what's done today. So London's just been brutal. What are we doing here? No. Not doing anything in the US 500. It's just sideways action. Just like I thought. Initial. The reason why I wanted this short is because I saw these volume imbalances right over here. And that little volume imbalance, okay, held price perfectly in alignment with the dollar over here. From here, holding price perfectly into that level. That's beautiful on US 500. I mean, look at that. Stunning. You could have got 2 entries, but I literally took it because this is my volume imbalance trade. As soon as I see, so if you can see over here, you have volume imbalances inside of here. We have it here. We have it here. We have it over here, but drawn out in time. Stunning. Then you have your fair value gaps. You have your volume imbalance now. As soon as that's broken, I then start thinking it's interesting because it's coming down now. It might continue to go down. Then we have another one over here. Beautiful. And another one over here. Now this is all buy side. Do you see what's happening? Like on the downwards candles, apart from this one, okay, that's going down, but it's going up, and it's going, imbalance forms on the buy side and forms on the buy side. It goes on the buy side, up, breaks up, imbalance going higher, imbalance going higher. And then now, as soon as you see this little section over here, this is what's referred to as an institutional order flow entry drill, an IOEFD. This whole level right here. Okay, is an institutional order flow entry drill. Why is it that? It's because when you see the wicks, you can actually watch it in price. You can see that the candles started that time. It gapped down, and then what happened was the candles did this, came up and started doing, it was like a little twitchy movement where it came up, down. The next candle opened and went up, down, came into price, and went up, down, and lower, then up, down. And then it came the next candle, and it went up, down, and it started creating all of this. Yes, there's these wicks at the bottom as well. But because of that level, I was like, this is going lower. I can tell, especially because this whole price over here, the open, if you see this candle and you're confused, it's not very confusing. The close of this candle was here. The open of the candle, the next one, was here. That in of itself, the whole leg, is a gap. That's a whole gap right there in price. It's only seen sell side, so now it also needs to see buy side. But as soon as it starts doing this up down business, I've got a very clear, very clear confidence from that volume imbalance that's going to go down. So that's why I put that in, and then it went lower. You can see order flow did the same thing. It went from here to here, it then gapped down and went lower. So just remove that. Okay. Now again, this is a gap right here in price. This here is a gap. So that there, 50% to that is consequent encroachment, and let's make it perfect. 50% of this right here, you'll be looking for that later on in price. What happened? Oh my god. So if you see that gap over there, look how price responded to it beautifully. That 50% of that gap came in, and I'll still be looking for buy side here later on. That for me is clear buy side. But yeah, that's beautiful actually. That consequent encroachment to that gap. Love it. As soon as that, and it created another one. Look at this. This is the close of the candle right over here. This is the open of the next candle. That's a gap. You see that in price? That's a gap. Not the clear visual gaps like these ones. The ones like this. This is what ICT has not said just yet, but I'm sure he's going to mention it later on in his streams and stuff. But when you see price doing this business over here, it gapped lower. So that, to me, is an imbalance, an inefficiency in price. And I'll be looking at that gap, the center of that gap, for later on. So in consolidating markets, where do we see order flow going right now? We've gone down, we're going down, we have come up to just over here, and we're going down. This level will be revisited later on. But yeah, it's just like that. Want buy sell side to be taken first. Initial sell side, and then we have the close of this candle and the open of this candle. There's a gap in there as well. A little tiny imbalance in price right there. Now I don't know what to call these gaps yet, because ICT has not said it, has not taught it. So I'm giving you guys some nice new things. Like, what do you think you would call that gap? An imbalance? Is that a volume imbalance? Is that fair value? I mean, I don't know, because it hasn't been taught yet. No one has taught this concept ever that I know of. So when you're watching price on your chart, you can literally see the same thing happening, not just on US 500, but in your broker chart. You can look at the same thing happening in on your forex. So let me put this over here. Let me share another screen just so you can see what I'm referring to. One share. Okay. So we zoom into price here. Right, so let me put this down. We zoom into price over here, and you can see that's minimal. No, I would want to like make it longer. Better. Yeah, this is better. I can see it. I can see price easier here, and you can see it as well because it's like zoomed into the max. This is why I say like sometimes I lose myself in price. Okay, so I'm looking at every single individual bloody candle. All right. Yeah, he's amazing. But the fact that he noticed it, I actually noticed it before I even started studying ICT because I was wondering why is it that TradingView never ever shows these things in price, but on the broker there's a whole bunch of like missing price action, and it always confused me. And then now I know that that's actually where the algorithm is priced into. But things like this, for example, I'm just going to draw it here. If you look at the high over here, that's the closing price. The next candle, that's opening price. That right there is a gap. Right there, you can see. This has this, yes, there's a little volume imbalance over here. And there's also another gap, the closing here and the open here. This is another gap right there. Okay. Now, this gap has not been referenced yet by ICT, but I'm sure he'll bring it up at some point. And as you can see, it goes here, it comes up, and because it's offering this leg of this whole leg over here, it's offering you a value. So if you draw your fib of that whole leg right there, where's fair value? 50% or lower, right? And it taps in to that little thing, but you could even, if you put your fib on here, you won't be able to see it. But you could put a horizontal line at 50% of that. That's constant encroachment, but not of the whole wick, of that little gap in price. So 50% of that, like that's just so perfect in price. I can't zoom in further, I'm sorry. But see these type of concepts. It's mind-blowing. And to see this gap over here, from the closing to the opening, it's filled, it's gone to the sell side, and it's buy side, and then you see sell side, and then it's just meandering around in price. Now everyone knows the fair value gap. It's so easy to see that gap. It's so easy to see this gap in price. It's so easy to see this gap in price. But the ones that are hard to see are these tiny ones that I'm talking about. This one, closing, where does it open? Down here. That is an imbalance as well. So I'm teaching you things that even ICT hasn't taught yet, that no one's ever taught. I've noticed in price. Mind-blowing stuff. And this is the Euro USD. So you can see here, this is the fair value gap over there. That's fair value gap. It taps in beautifully, but we have another gap up here that has not seen any price action. There's been no buy side and there's been no sell side to that. So that would be a void, a complete void. So there's been a market structure shift. I would expect it to go up to that level up there. Because there's been no price traded to that price point. Yeah, you can literally just go back through price and see these things and how price reacts with it. You see this section over here is the closing price and opening is lower. Look how the body over here expects that body. Goes through this, yes, but look at that. There is, what's the opening? Can you tell me the price of the candle, please? The open, high, low, and close. That's showing you open. Yes, I want to see open. Open is 1 spot 05227. Look at the open of this candle. 1 spot 05227. That is exact in price. Because there's a little gap there. Like it's actually perfect in price. Look at these two candles. The opening of this candle over here, that's 1.05287, and you look at the opening of this candle over here, 1.05287, and what's there as well? We have a tiny inefficient gap in price right there. It's perfect to go up. We have a volume imbalance just in here. Volume imbalance just over there, it goes up, comes right into this, sells down, comes back to that volume imbalance. This gap, just to give it both buy side and sell side, because price needs to see buy side, sell side, buy side for it to be considered not an efficiency anymore, not an inefficiency. So this is good price action for that not to be an inefficiency anymore. Just above that, we've just created volume imbalance. We've just created volume imbalance. We've also now have a volume imbalance right here. That's, yeah, the price is definitely going up to this level. The downside, we have this volume imbalance over here. So we'll see if there's some reaction to that. There's a fair value gap just inside here as well. There, but it hasn't been seen over here. Price hasn't been delivered to this point. It is being delivered right now. But all of these little sections in price, you can literally break it down. Now you don't need to just break it down on the 1 minute chart. You can see this reflected. Let me actually just remove all of these rectangles. Okay. Now, just in price action right here, there's a slight inefficiency from opening, from the closing of that candle to the opening of this candle. That whole block right there, it's inefficient. Gotcha. This whole section of price. So what did the wick do? It came in, and then now it's left a volume imbalance going short. Now it's gonna probably gonna see price go lower to fill in some other kind of inefficiency. So we'll be looking at this inefficiency over here, or we'll be looking at this inefficiency over here, or we'll be looking at the completion of this fair value gap down here. Yeah, or you'll be looking at sell side. But because sell side has been taken down here, next level we're looking for is buy side. And where's the nearest buy side? Up here. Just in that little section of price that I talked about. Fascinating. I love this. Anyways, we're going to 5 minutes. As I said, it's not necessarily just on the 1 minute part. You can see it everywhere. So let me just decouple this for a second. Alright. So again, this is Euro USD. This is not indices or gold or anything like that. This is literally, I'm looking at what my broker is giving me. From the open here from the close to the open, that's an inefficiency. How is price respected? It's offered both sides of the market, and then it starts breaking. That for me, confidence that I'm going to see the sell side. Now you have this over here, which has also been traded to. Perfect. It's been traded to. It's been traded. Look at how the candles are perfectly in a line. That is perfect. Doesn't get any more perfect than that. And then it snips this over here. Boom, with the LSMA indicator, with a whole bunch of other stuff, and the imbalances, volume imbalances going on the sell side. As you can see, between this price and this price, there's a volume imbalance going lower. We have an imbalance right there. So if you don't see fair value gaps like this one over here, you can literally look at all of these little ones in between. Tiny little imbalance just over here. Again, we have, as you can see, there's like no fair value inside of here apart from here. There's no fair value gap. But if you're looking at price, you'll see that that low and that high over there, okay, that is where it gets traded to then start going lower. IOEFD, institutional order flow entry. So here's equal lows that gets traded to. There's no inefficiency at this point. It's perfect price action. That's absolutely perfect. Goes lower. We have tiny little imbalance there, and then all that price goes lower. Then you have, yes, you have your fair value gap here, which is perfect. But what else do you see? I see that the close of this candle, the open of this candle, so the close of this candle and the open of this candle is just above there. Look how perfectly price respects those 2 points. We also have the open of this candle, the close of this candle and the open of this candle. So right from there, close of this candle, that's an imbalance. Didn't reach for that. Reach for this one. Because it broke, came in, tap. They don't want to see price come there yet. Again, this is just how to read price, or the way that I see it. So you can come down, you can look for all of those little interesting things. There's a little interesting gap in here. As you can see, that gets respected all the way through. All the way through. That gets traded through like that a lot. And then we have this little cheeky one over here. You can see it does the same thing. It's like a level. It's like a resistance level. All right. So this is why a lot of people trade the support and resistance or supply and demand concepts. What they're missing though in their analysis is where to pinpoint the exact price that it should move away from. So it's come up here, it's gone down, it's come up, it's tapped into it, it's gone down, it has broken these equal highs into this fair value gap, which I was not seen to because I was trying to seek fair value on the buy side. And it came down and it left a beautiful close of here to the open of this candle. Price comes exactly into here, respects these two candles. So it doesn't, if it broke this, then I'd be seeking buy side. But because it respected that, you then start seeking sell side, sell side, sell side, sell side. And you have this monster range that has just been created, and it's left a whole bunch of imbalances actually in price. No, they're perfect. There's one just over here. There's an imbalance right there. Imbalance as well between here. And that sets that whole price, this little thing over here. I mean, perfect. Actually perfect price. So if you were considering this to be open is over here. If you're considering supply and demand, how they trade is they trade from one section to another section to another section, and if it breaks, you have a retest of your resistance area or supply area or whatever, and then you sell. But I mean, if you can see that perfect, and this on the 5 minute, it's not even on the 1 minute. It's not like fast. You can literally take your time and look through these candles. What's also here that's nice, this tiny little point in price right there. That's right there. And you have this one over here. And then what do we see? Look in price. Well, we have that over there. A little section over here which has not been seen to yet. We have this imbalance over here. As you can see, look how perfect that it respects it and goes higher to seek demand or whatever. Now if we drag that same one out in time, This fair value gap, for me, I would consider that to be a high probability fair value, because you have an imbalance nestled within a fair value gap. So it's not just a fair value gap, it is the thing that's behind in price. See, nice, beautiful, beautiful, beautiful. That's like perfect. Literally perfect. We go down, these volume imbalances over here, respected beautifully with those bodies. And now we are seeking this buy side right over here. So I hope that brought some entertainment and some enjoyability into the whole way that I see price and why I have all these random things drawn on my chart. Now you know why. Literally, ICT goodness, baby. ICT goodness. Now I would have never actually figured out how to do this without him saying, this is how the markets actually book. And you can develop your own trading models based off of your observations of these inefficiencies. What time, what day of the week, what week of the month, what month of the year, whatever has the best confluence and stuff within your trading. Now this is not just seen over here. I can go back to a random point. So I'm looking at you, I'm not looking at price. Yeah, I can go back to any random point. Let me just zoom in. Okay, and this is a huge choppy chop range. Okay, and you can just start marking. Well, I see this is an imbalance over here. You can see imbalance over here. How is that respected, drawn out through price? Wow. I mean, yes, there's the fair value gaps. There are inefficiencies. But the reason why I call myself a volume imbalance trader instead of a fair value gap trader is because I respect the volume imbalances more. So example, just down here, there's a little price point in there where if I see price break that and it has this wick, I know that that is an IOFED, sorry, institutional order flow entry draw. And as soon as I start seeing this wiki going up, then what I'm doing is I'm setting up my buy. Then that's confluence that I'm going to take this higher. And it goes down. And then when it goes down, what does it leave behind? Well, we have a little one over here. We have this little section over here. I mean, that's not confluence. I mean, look at to where these wicks are going to. Like, look at it, and tell me that I'm like crazy. Fair value gaps, again, you could see this and be like, okay, well, I'm going to take, as soon as that fair value is created, I could take an entry here, stops over here, trade low. Okay, if it's a chop, whatever chop range. But within here is a volume imbalance. That's perfect. That's why in my trades, I have very short stop losses. So my stop loss will literally be the candle just underneath, which is the swing high, but not the wick. It'll be the body. It'll be the candle, but the body. Okay. There's a slight little one over here as well in price. Now, if you draw that out through time, look how it respects that level perfectly. And then what do you trade? Well, there's an imbalance right here. As it goes up, I'm expecting it to continue going higher. I draw this out through price over here. Okay, let's continue drawing that out through price. Is it confluence or coincidence that that specific volume imbalance over here is tested to go up as a point of demand or supply or whatever? Yeah, look how many times it's been checked out. Okay, we have this for me. When I see price do this, what time is that? That's opening, yes. So this for me is a very important piece of price action. Where there is no, whenever you see something like this, where there's literally no wicks or anything in that price, that's what's called a liquidity void. It means that there's zero price action in it. They're very, very important levels. Later on, price will come back to that. It is like a must. Here's my reference. From here to here, you can see how price respects that level perfectly. If you go to the one that's above it over here, you can see how price respects that level perfectly, and then comes down to that void. Now these voids are like super duper, and then we have all of this. But even within a chop range, you can literally look at it and be like, this just looks like noise, but it's not noise, literally. Okay, so why it's not noise is because you can have this price over here. Yes, it broke lower, but what did it do? It then changed and broke this candle immediately. Okay, what did it do? It came down and tested this fair value gap, which was within that void that we spoke about before over there. I mean, that is just coincidence, of course. From that section of price, it shot up and broke all of the structure. So where am I looking? Buy side. So there's a fair value gap over here. As soon as you start seeing price action doing this kind of stuff, and there's like lots of confluence, and there's a void underneath that has not been tested, you're just looking up. Now, looking at these moves, I don't necessarily want to be part of these moves. These big moves are like the manipulated news. There's a fair value gap, whatever, I don't trade it. What's happened here? There's a humongous void in price. That's the gap void, okay? How would you decide if it's respected or not? So order flow is how you decide. Understanding order flow. This big gap is the reason why on Monday and yesterday I wanted price to come down, because it didn't actually test this. It didn't cover the void completely. We go out through price, okay, and we see where it went to today. It came all the way up here, and I literally look for, there's a big gap in price. What do I want to do? I want to trade to that gap. So I'm looking for entries that go down. I'm not looking for entries that go up. I look for shorts. So that's why I say if it respects it or not, is I'm not looking for it to respect it. I'm looking for it to be left alone. And then as soon as it's left alone, the next day or the day after, I'm looking for entries to go to that level. So this whole week in price, what I've been looking at is shorts. So let's go back from this section of price. This was on Monday, 13. Yes, it's like Monday, Tuesday-ish. Okay, I was waiting for price to break to go lower. Okay, so as soon as we have this over here, it goes up, it's respected. This whole down leg, okay, is broken once and it has not broken again. Because it's not broken again, I still see order flow as being bullish. So I'm looking for the imbalances, so that fair value gap, because it hasn't broken it, I'm looking for imbalances and stuff to go higher, set by the previous leg. So over here in price, we have this little fair value gap in there. We have that fair value gap in there. We have tiny one in there. So you're literally looking at all of these little sections in price and seeing where's price going to be held and where it's going to break. And now if you want to be a breakout trader, you can still be a breakout trader with the ICT. Yes, it's not going to give you the best risk to reward, but you'll be able to, for example, I won't be able to show it, but you'll be able to look at like this section over here, these highs, okay? And if you want to, you can set your buy over here and put your stop 1, 2, 3 underneath here. 3 sections of imbalance. So we have 1, 2, and 3. Those 3 below your entry. If 3 get broken, you know that order flow is bearish. That's basically how you do it. Okay. Then you have, as you can see in price over here, we have there's a little section of price right there. Okay. Now that is the close and the open of this candle over here. You see how that gets respected? Absolutely stunning right there. That was just beautiful. What's the body of this candle? Show me. The body, the open is 107115. Let's look at the wick of this candle, the low. 107116. So that was like 1 pip. 1 pip. Would have been wrong. Yeah, so if you put like that's why I enter manually, because sometimes this happens and I enter and it's like, if I'd set a limit order, I wouldn't have been able to get that entry, even though my entry is slightly higher. Okay, so again, we have this leg over here, which I'm looking for two breaks. Okay, I have break and then market structure shift. That's how I do it. Okay, so this leg doesn't break this, so that's not my market structure shift. So I look at the next one. So over here we go up, we come down, we go up. We've now changed. So if you're looking at this leg, that's broken 1, that's broken 2. So I'm looking to go higher. Price goes higher, higher, higher. This whole section over here. Okay, this is nearing the end of like a move. The algorithm wants to carry on taking people's money. Now, this price point over here was actually just above the previous daily. Okay, so I can pull that out over here. Okay, and I'll put my horizontal over here. That was the previous daily high. Okay, so now as soon as I see this and it's underneath that daily high, I'm not taking a trade because I'm waiting. I'm waiting for a point of liquidity to get taken. That's the liquidity. Liquidity gets taken, then I'm expecting some kind of a shift. So I look over here, I have a red over here, and then a blue candle. The blue candle's a buy. That, for me, is a break 1. Now I have to wait for this low to get broken a second time. That second time it gets broken is my market structure shift. Then what I do is I start looking for inefficiencies, or where the inefficiencies, or the close of this candle, the close of this candle and the open of the next candle, there seems to be an inefficiency. There's a volume imbalance as this comes down. There's also a volume imbalance over here, and on top of that, there's a fair value gap over here. So that looks to me like order flow is going down. So I would then trust that any order flow seen after that is bearish. Do you understand where I'm getting with this? Or is it just like, yeah, it can be confusing. Here again, we have this one as well, and we have this one up here. Okay, now some super bosses, as soon as this gets taken and they see the first imbalance going lower, they will literally take a trade. I was actually, yesterday, I was on my one broker, and I had the order lined up, and I was like, I don't know if I was like tapping my desk, and I was like, should I trade it? Because it's gonna be a big move. Alright, it's gonna be huge. I only traded it on the US 500, unfortunately. I should have also traded it on the on Euro USD. But as soon as the previous day was taken, I was like, yeah, I'm going to go short. And then as soon as that happened, in this consolidation, so I was short from like, it was this imbalance over here. I entered short with my stop above here, and it went 1, 2. And as soon as this started doing this, where it broke 1 over here and came down and started going up again to break again, I was like, I don't know, I feel like order flow is going to be bullish. And then I got out. So again, looking in this choppy price action, that's where you find the most gem. All right. So as we go here, take that out through price. Where do you see what's happening over here? That looks like a whole bunch of equal lows as soon as you've drawn that out through time. If you have this one section over here, which is the close and the open of the next candles, that's perfect. If you have this void over here where there is no price whatsoever, it comes through, gets traded to, gets traded to, and then starts breaking lower. As soon as that happens, again, the void gets traded to, and then I start seeing inefficiency. Again, I want to go short. This as well, there's a slight inefficiency in price right there. From this one was not traded to, so that is actually your true resistance level for later on. All of these sections of price like this that are not traded to will later on be a level that will get traded to. How it gets there is where the risk comes in. So that depends on where you are in the day. Again, what day it is. Literally this one to this one over here, that whole section of price right there. I mean, like, this is just gem. You can see that it looks like chop, and people are like, this is noise. It's not noise if you know what you're looking for, if you can read it. Oh, I'm just gonna do, all these people that are trading ICT concepts, and they're like, oh no, I see fair value gap over here, and then this level over here, that last one must be a bearish order block. No. It's not. Those are like the big things that I think that's. We are in a 1 hour FEG on gold. What can I expect to happen? I don't see the imbalances because I don't have gold on my broker. I can't see the imbalances in price on TradingView. So again, let's delve deeper into how the leg's going lower. So the continuation of bearishness. Okay, this goes up, this goes down. There's a little thing over here that broke once, not confirmed because it needs to break 2 times. It goes lower, this goes up. I set my break 1 point over here. It breaks this is break 1. If it breaks that again, this level over here, so as soon as I see bearish action and it goes up 1 more time, then that for me is confirmation of a long coming from the place of interest, which is your previous daily high. So then we're going lower. In this price action right over here, we have a volume imbalance that gets traded to beautifully. We have another imbalance. I like seeing these types of candles when you have like a gap, a body, and then a gap just underneath it. That for me is like is confluence that the direction I'm in is correct. So if you hold, because everyone's the same, you get this like anxiousness inside you because you're in profits and you're holding a trade and you don't know if it's going to come out and take your stop loss. Okay, that it happens to everyone, and that's kind of normal. But if you're reading price action, like the way that I'm showing you how I read it, I know that as soon as it's come up and it's done these 3 candles over here have shown me that it wants to do that thing over there, then I know, because order flow is still then bearish. So I'm going to carry on holding. Price goes down. Why is this level? Why does this blue candle here? Why does it come up there and not to the fair value gap over there? I'll show you why. If you see this level of imbalance in there, that comes perfectly. So that's the fair value gap that you would trade to go lower after that move. There's a little piece of price action over here, comes in, taps beautifully, goes lower. You look at this price action over here, just the high of that candle goes lower. This is reading price, seeing how it goes to these levels. Again, next one over here, price comes up, taps in, goes lower. It doesn't break this, goes lower. Now, if you see a big move like this, okay, you would consider this first leg to be break one. The next leg to be this one over here. If it breaks this, that's your market structure shift. So I'm not bullish yet. I would need to see price do this and then start making its way up again. Then I'd be bullish. Even though you have these volume imbalances right here in price, as soon as this comes down and it rejects that volume balance and rejects the next volume balance, it's like, yeah. This price action right here was 10:15. What time was that? That was just before London. 10:15 was basically when they start manipulating the market. So yes, this section here is a YouTube what ICT dubbed as the ICT 2022 mentorship model. You have a whole bunch of equal lows over here. Now those equal lows get taken. It gets taken, all of that, sets it up again over here. This is his model. It gets broken and then starts coming up the other way. In my case, we have the red candle from this low that gets broken once. That for me is confluence. Okay, that's break one. Goes up, comes down. That little one there is break two. Even though I see price now coming down, I start looking for fair value gap. Where else am I looking for? The close. There's a volume imbalance in there. And to add more confidence to that, you have the close of this and the open of the next candle over here. You can trade either from here or here, have your stop loss underneath there, and then you trade bullish. And so we carry on reading price. Volume imbalance. Gets rejected, comes up, breaks and makes a new leg, comes back to the volume imbalance. Even though there is a fair value gap just over here. What's more important in my eyes? The reason why I trade volume imbalances and not fair value, I trade fair value gaps, especially if they have a volume imbalance behind it. Okay, I'll show you what I mean by a fair value gap with a volume imbalance behind it. Okay, so if you're and I don't actually add all this onto the chart all the time because I'm just looking at it and seeing the imbalances in price myself. But what you do is you see this and it's okay, that's the last volume imbalance. You go up, there's a volume imbalance over here, there's a volume imbalance over here, fair value gap over here, there's a little volume imbalance behind it, no, over here, perfect. Okay, so here in price on this big down leg candle over here, even though it took these lows, okay, which is in coincidence, funnily enough, because I'm bullish, because if you're reading price, there's a little fair value gap in there, that's perfect. Okay, goes higher. I'll show you how I trade breakers. But as you can see in price, this was 830 manipulation. Okay, so you've got your buy side and you've got your sell side. It goes up, it comes down, seeks sell side. This is my model. This is my like daily London model. Okay, now what I'm looking for is I'm looking for an imbalance and an FVG and a shift in structure. There's three things. I know it's rough. Okay, so from here, I see this red candle over here that gets broken. It leaves a volume imbalance in place. But this has been offered fair value down here. There's a fair value gap from that high to there. Okay. When I see price doing this, it does this, it comes down. What I was looking for, like I said, the imbalance that's behind the leg. So this leg over here, this little imbalance right over here, volume imbalance within that fair value gap or consequent encroachment of the gap, okay, 50% of that fair value, that would be my fair value gap entry to go higher. Same thing on the sell side. So in this, even this choppy price over here, yes, there's no fair value gaps, okay, but there's a void there. As soon as price goes down, I would be looking for buys of some kind, for a shift for that void, and look what happens. Yeah. Anyways, even in this chop over here, Guru, I showed you right here. So from this candle over here, it breaks higher, then it comes down in price action, okay, and as soon as that candle there shifted higher a little bit, I am looking for buy side objectives. For me, that volume imbalance behind the fair value gap right in there is confluence that this move has made its run and it's going to go higher. At least to the buy side over here that was set at 830. Because that was the whole CPI or whatever manipulation news for the day. And this is also a way for your funded accounts to never ever like break the rules, because you're not trading during like the big things. You're trading afterwards. You're reading price after the fact, and you're setting your sell side and your buy side on those candles. Basically, it's very easy. Okay, so I'll show you another shift in structure for me. This leg that's coming down, that gets broken over here, okay, by this blue candle. That for me is break one. If I see that candle get broken over here, I know that for me is a market structure shift. So I look back in price and I see where all the imbalances are, which is over here, because of that void. Okay, I would be very cautious of price coming up to tap that void. As price comes down, there's one there. We make a leg. I'm still bearish. This is even in a time zone. So this time is the time of the day where the new daily gap gets set between 5 and 6. Okay. Now, just after that, 7 p.m. Asia opening, okay, is this, I think, yes, but again, we have the red candle, blue candle, red candle, okay, that one red candle there gets broken higher. As this next red candle gets set, that's another low. So this is the fractals within how you read it. It's not super clear fractals, like if you see lower, higher, lower, breaks that low, yes, that's a fractal confirmed to go lower. Everyone knows that. But when it comes to the way I do it, is I literally am looking at each leg. So that whole leg there, I don't wait for that to be triggered before I'm in my trade. I'm in the trade before the leg even starts moving. Alright, so we have this red candle that gets broken once. The next red candle gets broken twice. So after that, it forms the fractal, okay? And I'm looking for the imbalances in price. Where are they in the leg before? Let's see. We have this one, which actually supported the second break into the market structure shift right there. Okay, which is nice. We also have this one over here in price. Right there, beautiful, beautiful price action, stunning. I'm looking for, there's another imbalance. Price right there. There's also, from the high of that candle to the open of this candle, that's an imbalance. We have an imbalance over here. We have an imbalance over there. Okay, between there and there, there's a difference in price. If price is rejecting this, you know, you can see Like where are the longest wicks? They're going to the upside. And why would I want to seek the upside? Because that void that I mentioned before, right in there, where there's no price action whatsoever. Price wants to go to those voids. And you're literally waiting for, so that's a red candle that would have to be broken once. It gets broken once, and then it sets the new red candle, which would have to be broken a second time for market structure shift. Doesn't happen, goes lower. So that is not confirmation to get into a trade, to trade to that void. This would be my confirmation, all of this price action, to get into a trade, to trade to that void. And because of that massive gap over here that we mentioned before, okay, there's a huge gap, that big gap. Ultimately, the daily high is taken, not that daily high, previous daily high. So I'll put it onto the 1 hour. See over here. So that daily high got taken. I then am looking again, because of this gap down here, I'm looking for shorts. Okay, so this gap, the daily highs get traded to, yes. From here, they get traded to, it breaks that, and then I'm looking for shorts, goes lower. Okay, now I'm looking for my next day. My next day, over here, gets broken over here. Time-wise, time is that? It's London. That was Asia. So this is Asia. So if you're trading, ICT and you're looking at his Asian range thing, you see a massive gap void down here, and Asia's done this little consolidation thing. Yes, you're looking for a Judas swing, which is the fake move higher to go lower. It's almost predictable. Okay. So again, that's the high. I'm looking for that high over there to be taken. That high right there, I'm looking for that to be taken. So I'm gonna go back into the 5 minutes, moving price. Going up. Yep. So again, daily high gets taken. I'm looking for a shift in market structure. See there? Red candles. A blue candle gets broken once, the blue candle gets broken twice, and then I'm looking for downside action. Perfect. Okay. And there's a lot of movement. If you are a multifaceted trader and you're like watching price like a super hawk and you're trading different sessions, yes, you can make the swing, you can do other stuff, whatever. Again, this high here gets taken. What am I looking for? Shorts. So I'm looking for that. This would have all been my trade. Fine. I wait for price the next day. What happens? Breaks the high, the Asian session, which is just in here, and then starts coming down for all of that stuff that we spoke about before. And right now, we're just, like I said in the beginning of the stream, we're just in this sideways consolidation rubbish. I mean, like, let's go look at it in the 1 minute. Yeah, it's just sideways. Oh, look where it traded to. Remember? I said this little imbalance right in there? Traded to that. Perfect. Now it's taken buy side. Look at the reaction from that level. You can literally just take a short, like an open short, and then just trade. And just take profits to a couple of pips down. It's really, it's really funny. Looking at how price action reacted to this level that I marked out. Wow. Wow. You know what I'm saying? I mean, just wow. So yes. That's why I don't, like with ICT, he laughs at people who use trend lines. I don't laugh at people that use trend lines because I think trend lines can serve a purpose. For me, trend lines serve as liquidity. As in, there's a lot of stops underneath every single low of the trend line. So let me pull up I'm going to get rid of my broker quickly. pull up my chart over here. Okay, because this is, oh, there's a big gap over here in this price. Where's that? US 500. Why are you setting a gap? I wonder why there's a gap here. We have this one, we have this one. That's a void in price. Okay, so that's the close over here. Yeah, that's a void. Price needs to come into here and do its thing. Now we haven't completely taken sell side yet. Let's go look into my other chart. It's a whole bunch of equal highs up here that have been set. There are imbalances in that as well. But looking at the rest of the chart, yeah, this looks like it's actually going to be an afternoon. Looks like it's going to be an afternoon long. So you can see I've set my sell side and my buy side. What are you looking for in price over here? It's quite cheeky. So it takes it. We have this one, which is 1 and 2. So I'm looking at this whole section over here in price, which was 11 somewhere over there. That whole section got taken on dollar, and then you have this red candles over here. Those are your break 1 point. As soon as it comes up and it breaks it again, that's break 1. Now that red candle there is your break 2 point. So then you have this come down to break 2. What are we looking for in the leg, in the market structure shift? You're looking for the inefficiencies in price. That would be an ultimate entry for shorting down to, see the trend. So if I draw a trend line over here, that is liquidity. I look at that and I'm like, oh, delicious. I'm going to trade down to the bottom. And because this trend line continues, I'm like, oh, delicious. So guess what's resting just underneath that trend line? The sell side I marked out. Bang. That's where I would be going to. But hey, they might decide from 1 o'clock now, because it's about to be manipulation time, that they're going to run out this high and then go lower. Guru, which pair? Which pair would you trade? Sorry, I wasn't actually like looking at the at the chat. I apologize. Euro should be going higher. Yes, it is. Happened over lunchtime. Beautiful. See that liquidity there? That was your 9.30. Move this, because that's not how I trade. Okay, I'll just show you my setup. So kill zone is between 9:30, okay, and 10, or 8:30 and 10, or somewhere, whatever in between that. This is exactly how I took my trade. €1, okay. So you have 8:30, which is over here, okay. That is your buy side. That's the target. It should trade after it takes out sell side. Alright, very simple concept. You then have sell side, which is down here. So again, you look at 8:30 and 9:30. 29, 9:30. What's the lowest at 9:30 and the highest at between 8:30 and 9:30? As soon as it takes out sell side. All right, this is like a very high confidence trade. Even though I took this one, I took it because the chart started telling me that it was going to go higher. I'm expecting everything to go higher because of the end dog that's above. Okay, so it came up, it left a little fair value gap. I took this trade because there was divergence in the chart. In the GBP over here, okay, at that time, and price, make this all 5 minutes. Okay, at that time, there was going lower and price was going higher. To me, that was quite high confidence. I was like, okay, it's gonna rate at least these equal highs over here, and it's already done. What has it done? Leg 1 breaks it, leg 2 breaks it. I'm looking at fair value to go higher. The high confidence trade. Sell side over here. Okay. Bang. Sell side liquidity. Everyone was waiting for sell side to be taken. What happened after sell side got taken? We actually created a breaker. Nice. Okay, but disregarding the breaker for now, if you're just looking at price how I see it, it goes up. Okay. This candle breaks it. Now I would need the bottom over here to be held for my second break to be confirmed. As soon as it goes up higher, yes, I wait for my second break. It doesn't happen. This candle here goes lower than that candle, so therefore it's not a shift. Then I wait again. Lose, break 1. It gets broken once, great. But what does it do? It comes lower and stops me from entering the trade. Next, you're looking at, again, this is reading each individual candle as it's printing. Okay, so you then go next and you look at this leg over here. That's going break 1 over there, so you can have that. So I draw this out in price, and you have break 1. As it goes higher, you put something there, and you can call that your market structure shift. As soon as I see that break 1 has happened, the things have been respected, okay, and it goes higher, and then it goes lower, it gets respected, it breaks market structure, you're then looking at all your little imbalances in price. But because it's in lunchtime, it tends to be a bit like this, it tends to be a bit choppy. But you can even drag those points out in time, and you can see that from that break, price respected it, went up. From the market structure shift, it came down, went up, and within that you have all your fair value balance, your fair value candles, and all the stuff that happens in between. There's a little bit of price action here. Open and the close. One part over there. That's just too perfect. Sorry, it's just way too perfect. And so yes, now order flow is going long. As it's taken sell side, what are we seeking? Seeking buy side. So my analysis before, if you start up the stream again, okay, is going long to here and even to higher points. All right. Now getting onto gold. Let's get onto gold. Let's see what happens. So same concept. Exactly the same concept, exactly the same time frame. You don't need to change anything. Let's go into the 1 minute chart. Are we price and time? Yeah, it's on the 1 minute. It's all the 1 minute. I trade on the 1 minute. Okay, so what I'm doing is I set between 8:30, which is here, 8:30, That is sell side. Okay. 930, what's the highest point between 930 over here? That's buy side. This trade's already happened. Now buy side's been taken. Honestly, it looks like gold's going short. Because so how my trades work out is between 950 time and 1010. Price will create some kind of structure after taking a point of liquidity to start seeking. So it's taken from here after it's been set at 930, which is over here in time. Okay, so now I always have a vertical line at 930 right there, and you see where price is. It took sell side first. That was sell side. Now I had a little bit of a market structure shift, and I don't know where the imbalances are because I don't have it on my broker. Okay, but it's highly likely that you would possibly have imbalances within this price point over here, and I would be seeking the buy side for that. So even if you did put this here and trade it into here, or even had it at that point over there, 1, 2, and you're looking for whatever fair value gap in here, you could have taken a 1.5. If you didn't reach it, then it's obviously still got some range, but then you could have re-entered your lows over here as soon as it broke. 1, 2, where's your entry? Fair value behind, drawn out through price, entry, and you seek buy side. Gold is actually quite rewarding. Wow, maybe we should start trading gold more. Like, look at this nice movement. Respect myself. So now between 12, okay, between 12 and 1, you can do almost the same thing. Okay, so 12 is over here. What's the lowest low? And 1 o'clock, what's the highest high? Yeah. That's your next range. So what do we see in price? We have this leg over here that gets broken by this candle. So that would be your break 1. Funnily enough, the next one over here, that would be your market structure shift. What's it seeking? Fair value. And you can take a short, highs, and you seek sell side. Or if you want to be very, very cautious, you just seek the nearest point of liquidity, which is over here, or over here, or over here, or here, or over here. You can see the price is going exactly the way that I say it goes. And you can, I'll show you an example on the previous day as well. So let's look at time. On the previous day, 8:30, and it was news event, funny enough. Happy days. Okay, let's remove this, let's remove this, let's remove this. And we have 8:30 low here, so that is sell side. And we have up here, that is buy side. Okay, even if though it's a big news day, we have these red candles that gets broken once. Okay, it's broken once. And then we have this break over here, which is your market structure shift. You then start looking for inefficiencies in price in the previous leg. Fair value gap that's behind there, that for me would be later on, but it'd be in a different session, possibly. Yeah, that'd be in a different session. What session is that? That's the initiation into the manipulation into London. So yeah, we have break one, market structure shift over here. You look for the inefficiencies in price. So we don't have one there, we don't have one there, no fair value, no fair value, no fair value gap. There's a slight fair value gap here, which was referred to there. Then have a fair value gap from here to here. That would be your thing. So you would trade either from the middle or from the bottom or from the top, depending on wherever you feel comfortable doing your back testing. And you have your lows underneath here. If it goes below this, then you're wrong and you lose. And where you're taking your trades to, ultimately you could take it to the buy side, but because of this super range over here, I would be looking at that later. They need to build up the sell side liquidity first, especially after all of this. Yeah, that needs to come down and mitigate this. Now, this section over here is interesting because what initiated this leg, the downward movement, is this over here. So it came down, it came up, and then this was the same. That's where I would have taken my trade to, right there. But what I like doing sometimes is I like taking here to here, just drawing out 50% and taking to the 50%, or the leg that's the low hanging fruit is right there. To go higher, it means you have to wait over lunch to go into that range. Then we go look at what's happening right now. Okay, we have 12, the lows of 12, yeah, so 1 o'clock. 1 o'clock. That gets taken. There's no market structure shift. It gets taken. It's taken again. Then we have 1, 2. Where's your fair value? Right there. You can take your short. Down to the lowest hanging fruit. There's equal lows. Or ultimately down to the sell side liquidity. Time and price. You don't necessarily need a daily bias. You're literally just looking at liquidity. But having a daily bias and then placing your trade along the same way that the bias would be amazing. You know what I'm saying? Because then you're literally just waiting for, okay, if you're trading London, for example, and you know that this hasn't been seen to yet, this buy side, you're then like, okay, well, this has not been seen to yet. There's a whole bunch of buildup of liquidity up here. Equal highs, equal highs, equal highs, equal highs. Price definitely wants to come up at some time. So we get down to this time and price is 4:30. What I like doing is between 5 and 6, I like to see a trade form. And it forms beautifully. Goes up, takes all of that, goes up even higher, consolidates. You know that in this consolidation, it's not going to come down because the buy side's right above it. Go up, and it goes up, and it comes into today, which is a small section of price. Oh, look at that, beautiful. What is that liquidity again? 12 o'clock liquidity right there. So that would have been a beautiful sell. Perfect. You see how price is reacting to this level right here, to this liquidity. Isn't funny? TDV shows, oh really? Actually put that in price. Let me stop those. Bro. Bro, no ways.
I'll be the best above all the rest, put me to the test and expect nothing less. Your check is I'm chess, what's happening next?
Yeah. I would look for price to come to there. The big gap here, I would look for price to come to there. Big gap here. Like you can just literally look at the gaps. Look at the gaps. Later on, it's coming down to here. Possibly the move that it's in now. It's gonna come down. This got traded to beautifully. But this is not the same. Is it? Is this what it looks like? Let me check.
Ambitions in the right mind can take you so far. It's like you lived a few lifetimes. Take off from a break off from the weak minds. They can stay soft. You can change lives. You create thoughts. Never waste time. You got
Metals.
life. Better pop off. What do you like? Make a dream job. No 9-5. No mean boss. Just my life and free.
Looking at FTMO. Gold spot dollar. XAU USD hour minute. Same. No, it's not the same. I have to set this whole chart up now. Back. Right, the inefficiencies are here. Oh my god. Okay, so that is not necessarily, this is not the one I would want to trade, because this is this one. Do you show the inefficiencies in this chart? Oh, yo. Yes, you do. Whatever this one is. Oh, it's too perfect. Way too perfect. This would be your sell side. Alright, this was today. 8:30 sell side to 9:30 buy side. Now take sell side, where's it going to? Which inefficiencies? You've been priced in. Nice. Open the close over here. That's a balance that has been traded to and through and back. Nice. This one is a void right there. That's way too perfect. If I see that and I see this candle formation over here, same thing. 1 and the 2. I would get in straight up. 1 and 2 comes in, bang, I'm in the trade. This would have been my trade. Where's all the inefficiencies in price? Fair value gap. Little inefficiency here. Oh god. Maybe I should trade gold. What? Okay. Hate versus end of times. I trust that's you have your method and that you know what you're doing. I don't ever bash on anyone's system. Whatever makes them profitable, they can do whatever they want to do. That's my belief. And so, yeah, after buy side gets taken, I'm looking for sell side inefficiencies. Drawn out inefficiency through price with a fair value gap. That's high confidence right there. Down, still gapping down. It's a void over here, takes it. Not just coincidence. That's not just coincidence. You could even check on the LSMA and see it tap in. The highs, trade down to the lows, 12 o'clock, right there. Reward. Yo, that's good. That's very good. So one broker will show inefficiency, another not. I disagree. TradingView shows no inefficiencies, but all brokers will show inefficiencies. I've used 3 brokers, 4 brokers, and they all show inefficiencies. All of them. I'm actually going to keep this chart over the other one I had. Remove that completely. Whichever one this is, I like it a lot. Oh yes, it's there. Wow, I'm bearish gold. Definitely bearish. Look at all of this underneath here, these equal lows. Oh my soul. All of this price action down here. That's going to be traded. It's going to come down. My prediction, whether it's today or whatever, I don't trade gold normally, but somewhere around somewhere here, we're going to drop right down to just underneath here to 1812. Like looking at this, initially you would be trading to 1871.67, let's just say 1872 to fill in that gap, and then yes, that's some beautiful stuff. Let's go back in price, see what we have. That is why price is where it is right now. Come in here, offered fair value. Is there anything higher than that? Look at the daily. There's equal lows up here. Oh, that's a draw though as well. But let's look at the daily. It seems like gold looks like it can leave voids in place as well. Right over here, let's see, gold's left a big void. Look at the reaction from that void. Amazing. Void over here. This is a daily. Thursday to Monday. No, Friday. Public holiday. Void over there. Yeah, I would have been looking for all of this. I would have been looking for sells. I would have been, instead of looking for buys, I would be looking for sells to go to that void. Void over here. Drawn out in price. As it goes up, I would be looking for sells. Sells. I wouldn't be looking for buys. Before you got taken for highs, right over here. Beautiful. That's later liquidity. Yeah. Also left an imbalance just in here. Oh, gold works, but it works on a different. It looks like it works on a slightly different structure. I have to actually do some more testing on this. I just have never traded gold since well, basically I just looked at the spreads and I was like, the spreads are way too big. I don't trade big spreads. But you've got these equal lows down here as well. But it works the same. Just maybe there's slight variances in the pattern and the way it goes right to the back. That is huge days, absolutely huge. But if you know that you're bullish because there's imbalance in price, there's equal highs up here, you know you're going there. But it works exactly the same. This would have been a nice balance. Look at that. 1, 2, 3, bang. There's another balance there. Oh. That's lucky. Pull up 4-hour chart and check it with other brokers. You'll see the difference. Okay. Hours. But why are you on the 4-hour? I don't ever use the 4-hour. I use the daily and I use minutes and the 5 minutes. That's it. Yeah, this is a big point of that level right there. This price right here, where I've pointed this arrow to, I could see that. Now let me go look at let's see what FTMO says. On the 4-hour, right? That's what you said. Are you sure about that? Are you sure you're sure? Because on my FTMO, it's showing the imbalances in price on the 4-hour too, exactly the same. So let's just look at the price, at the lower candle of that in the 4-hour, 1871 on the 7165. Yeah, there's a slight difference, but you need to attune it to your broker, of course. Oh my god. Gold is a gold mine. Maybe I should actually start trading this. It looks beautiful. Beautiful moves. Consistent. Yeah, but not super different, but what you should be doing as well is that your trading view analysis is just a a direction. It's just like your basic analysis that you're looking at. That's why I have told everyone, if you've seen the streams, that you need to pull up your broker and you need to be charting on your broker as well. So as soon as you start reading the candles on your broker, and you'll see the slight differences and variation in price and stuff, and you can anticipate that as well. You need to get comfortable with your broker. And now on FTMO as well, there is actually on the 4 hour of that blue candle. I mean, that's not coincidence. And you don't see it on TradingView, but you see it in the broker chart. I'll show you here. Not as clear unless you zoom in, but this price, there's a inefficiency right there that gets traded to. There's inefficiency right behind. I mean, you know, it's there. It's there. Right, you know where my direction, where I think that gold's gonna go. Let's see if Euro going above here. Ooh, this is interesting. So again, when I see a trend line forming of any kind, alright, when people love trend lines, I look at those points as liquidity. Equal lows over here. And so from a point of interest, as I said in the beginning of the stream again, I'm expecting sideways, and it's doing exactly what I said. It's went up and it's gone down. Now it's gonna go up and then it's gonna go down. Possibly to right here. Underneath these equal lows, where the 12 o'clock liquidity was not taken. Yeah. Right here. That's possible. But it's going to take a while. And yeah, I'm not going to be in those moves. To me. Because my trade is already done for the day. I'm finished. Which highs to mark London kill zone? So one of the reasons I don't trade London is because if you look at the stuff, if you look at the end dogs that are set for the day, okay, you look at how price reacts from them. This was the initial end dog, so just remove that. Okay, for the day, 5 o'clock, price, stock, opening price, that's in time. Okay, that's the end dog for today. Now, generally, what I see is that price goes away from it. This actually started, this move today started in Asia. No? Wednesday. Where's today's one? Yeah, started in Asia. And then just completely crashed down. Normally what happens, what I've come to experience, is that in London, Like if I see price action like this happening in London, there's no ways. Okay. From 2, that's when your kill zone would be. Okay. And you'd be looking for a trade between 2 and like 3. Okay. Now, if you set the same criteria of you have your buy side within that and you have your sell side within that, it doesn't work out the same. So I don't trade London the same way I trade New York. London, I trade how I told you. This. So I'm looking, the kill zone actually ends at like, I think it's 4 or 4:30. Okay, so it's over here. But let me just remove that and I'll show you quickly. As you can see over here, it comes up, price respects this, comes in over here, nice. So over here, you can see this one over here. And you can see this whole price action over here. The same price point over here. From the wicks and the candles and stuff. Fair value gap, just right in there. There's probably some kind of inefficiency set through our price over here somewhere that led to this, as you have seen me demonstrate. Yeah, that would be a trade taken before. So for me, because in London it's already opened over here, what I'm looking at is this is the closing price for the Americans. Okay, and the Americans opening price was down here. So this whole section of price now is considered a gap to America. This is a gap. Where's 930? Down here. That whole section of price right there, that's a gap. As you can see, prices has come into the gap and it's gone out the gap and it's come into the gap. I'm expecting price to go 30% or to cover the full gap. Then do what it has to do. That's why I generally trade New York session, because that's what happens. You'll see the previous day. Where is over here? We have 5. So just break that on price. 5 to 6 ish. 5 to 6 over here. Break that on price. What we have here is, again, we have your buy side, we have your sell side. Because price is underneath this end dog over here at 9:30. No, I wouldn't trade that day. Because at 9:30 it was exact. Not my day to trade. But sorry, I have rules as well that I implement into my trading. So the previous day, same thing. 6 over here, dragged out in price. What I'm looking for is America to give me an indication at 9:30. 9:30 is over here. Okay. Yeah, that it wants to trade back down over here. It didn't give me that indication. It didn't give me the breaks that I wanted, except for the one over here, because it continues. It breaks structure at 1 o'clock afternoon session, because the morning session has been long. Afternoon session generally will be a little bit of a retracement, most often. Okay. Now I'm still looking for that price. So the next day at because morning session again is long, afternoon session is going to be short. Lovely. This whole section of price, we go back further, test it out. 5 to 6 over here. Closing. I mean, 9:30 is up here. Continues pushing. 10:50 decides that it's going to swing around and go short, but didn't go all the way. That's why I said that 50% thing that I have is just to make sure that I get out of my trades. That's a 50% level, and if it doesn't want to reach for this level because it's bounced off it and it's a Friday, it has to close. And 50% is a good range. Are we looking right now? Let me check. Euro. One, two, actually. Looks like there's an afternoon short coming in on Euro right now. The rest of the pair saying, what's the XY saying? Quite nicely, actually. So SMSH, we're talking about the show it. I think it's only if you have the paid data on US 500. There's a thing that you can add where it's a it's something called electronic trading hours and real time or like real hours. Okay, so it's ETH and RTH. And what that is basically the price difference between New York close and New York open. That's what it is. So I'll show that in the chart. What's the price difference between when New York closed on the day over here? It closed the previous day over here because 50% of the previous day, okay, is beautiful. And then it went higher. 50% of that day closed. So that's the close of New York. Then you have Asia and you have London, all of this, and you're expecting inside of New York, sometime in the day, whether it's morning or afternoon session, for it to come and at least come into this range at some point. From there, it's going higher. So today, it's exactly the same thing. So we have this range down to the 930. Just pull that out. Open. Close. Go. Right there. That is your... It's another form of gap. 50% of that range is around there. Interesting how price after 8:30 it's taken buy side, makes a little bit of a sell. It's taken sell side, now it's coming to the long. Where's it going? I'm expecting it to come at least to this arrow, 50%. At least. But how you get in and stuff, I mean, that's your model. That's what you need to be looking at in whatever method. But yeah, this whole sideways price action thing today is not my gig. I did my trade already in my time frame, 20 minutes. It panned out beautifully. It only took 1, 2, 3, 4, 5, 6, 7, 8, 9. It took 9 minutes for my trade to pan out. That's how I like to trade. I don't like to be in trades forever. I like to look at the market and be like, yes, there's equal highs over here, which look like delicious. But possibly for tomorrow, during Asia or London. This is what I like saying. If it doesn't reach the target that I point to, for example, if it doesn't reach the target that I point to, then I'm expecting, so if this, for example, doesn't reach this target, I'm expecting the next day or the next session, either Asia or London, to go there. So over here, this gap wasn't filled, right? And you can actually ask Nightology over here. Oh, hello. I said, because he was sending me some tweets, and I said that I expect that either in Asia or London, I'm expecting it to go to the final point, which is here. Right there. And it did that in London session. It just came crashing right back down to that point. Funny. Very, very funny. Yeah, because I was in this move over here coming down, but it didn't go to my full range, so that's okay. I know the limitations of my trading style, and I know the rewards of my trading style. I know when the market is going to do what it's going to do, because that's I like this gold thing. Thank you for putting me on that. Let's see, is the chart doing what I thought it was doing? Is it selling off? Yes, it looks like it's come crashing right down through the floor. Loving it. Love it. It works. So same concept on gold. Exactly the same thing. Where's your opening gap for the day? It is. So I got a phone call. Hello. I am streaming. How's it going? Yep, I'll do that just now. Sorry about that, this is a phone call. Oh, so that's your day. Now, Price reacted by going higher into it. Gonna come down to it. I don't know. I have to test this on gold. I haven't tested it, so just give me a weekend. Yeah, this point over here, that's massive. I would say that. Let's go back a bit and check. Is it might react to it in different ways. Close. Open.
I wanna be the greatest. Everybody on the fake shit. I look around and feel like everybody is the fakest. I make this every day and I'm impatient, hoping one day I blow up from the basement. Statement, the top is so vacant. I don't hear shit that I think is amazing. Waiting for my day when I'm playing sold out shows for 1,000 faces.
11, 2 o'clock, 8 o'clock, 8, 30 is this candle. That'll be important liquidity in the future. That's important liquidity, whatever level that is. It hasn't been seen to yet. 1833.76. That's a nice big level. I know, but I've got some homework to do. But I won't do the homework on stream. I'm not here to do homework. But thank you for asking questions about the stream and stuff. Appreciate it. Ooh. They're reacting from that fair value gap that I pointed out. Let's see. Go look at the 1 minute on the broker. There's a volume imbalance. What price is that? R583.
Sing along. Trust me, there's nothing wrong. I just need to carry on, cause society's a myth put there to make you sit. Listen to what they give. Don't ask questions, shut your lid. Yeah, don't ask questions, shut your lid. I need no one else. Go get off the grid. Feel like my brain is overloaded, man. I'm losing it. Don't let them tell you what to do, man. They don't know shit.
So that would have been a nice entry. Let me just check the sell side and the buy side on here. Have anything on the sell side that needs to be taken, any objective? Honestly, no. We've taken sell side. Yeah. And my bias is going long. So for me, even though it's the afternoon, I don't know. I wouldn't take it. Because it's not aligned with my daily bias, which is longs. I wouldn't take shorts on a day I'm looking for longs. Just like I wouldn't take longs on a day I'm looking for shorts. Like yes, some people just want to trade, okay, they can trade down, and they see the shift and they can trade up, yeah, whatever. I'm not that person. I'm the person that will literally just sit here and for the trade that I want to take. Normally the trade that I take is the one that works. Getting in, sometimes I'm wrong. But yeah, I'm going to be done for the day. So thank you so much for chilling out with me. It looks like it's all just a little bit mangled, and there's going to be some kind of expansion. My bias is along. But normally afternoon sessions take it to the opposite direction of where it's been going in the morning. But for this day, you've had the morning going down, the morning's also gone up, and it's gone down, and it's gone up. So where's the afternoon session going to go? It's a bit confusing. Because of this move over here, my honest reaction would be for it to go down from that fair value gap, as I pointed out, after break 1, break 2. But because of my bias for the day being long, I wouldn't do it. Let's see what gold's doing. Down here beautifully, set all of this reaction. 500. So 100 is also reacting bearishly. Divergence. Oh no, DXY looks like it's going long. But we have taken buy side and it's coming down. I would want to see sell side. Yeah, I'm not short, I'm bullish. Flip this way. I wouldn't be in the trade now, it's on my time. But if it does pan out that this goes lower, that's great. It didn't have the snipe. I was talking about the LSMA. It didn't have that lovely little snipey move, which happens like this one. It doesn't have this little, like, yeah, didn't have that. I wouldn't be trading this. All day today I wouldn't be trading, apart from the first trade I took in the morning, just because that's where the price told me it's going to come back and it bounced beautifully. That little reaction in there, in the time zone. But yeah, if there is a big expansion later on, I think just chill. You know, there's no point in days where you have a massive move like this. You're going to expect consolidation. You see it in all expansions. Like there's huge expansion, consolidation for a long time. You have expansion, hyper consolidation. Or I say consolidation, it's the same thing. Expansion, consolidation, it's all the same thing. Expect manipulated consolidation moves to be a seek and destroy model, which is, okay, I placed longs to go here. If the people didn't get out, I'm going to come take your stops. Now, these ones over here, it's probably going to come above here to the buy side over here and start going seeking these stops because of all of the liquidity points over there, or it might go higher and come back. But I'm bullish on this. getting in there. Because again, it doesn't filter in time that you trade, and also your bias. It's something you need to have. You need to understand your liquidity point. You need to understand where it's going, and you need to know what time its probability is to switch around or to start heading towards that liquidity. And if it doesn't happen in your session, then it'll probably happen in the next session, which means you missed the trade. Which is okay, it happens, it's normal. Right, everyone, have a fantastic night, day, morning, whatever it is, your time. It's 5 o'clock for me, AM. So I'll see you next Monday, unless I finished everything, because tomorrow's going to be a good day, I hope. Alright, cheers everyone.